tick chart. So this is the 6B, which is the futures contract for the British pound. You can see right here that we established a real nice structure support level, 58.75 to 58.80s. Our DSR level comes in from the swing low here. We form another DSR support level from our swing lows here. Both of those are accompanied by either oversold bullish divergence on the RSI or extreme oversold right here. Right here we've got our cluster 3 trade, which is our RSI buried, our turning point followed immediately by the black tip. And then the market rallies nicely, 61.70s. We then double top right there. Again, there's the qualified sell. So DSR owners, come in here, left click right here, find all of your cluster trades that occurred at a previous DSR level. Okay, so as we look left right here, this turning point black tip right here was not a retest of a DSR level. This DSR level right here started forming over here. This, however, is a perfect qualified sell signal right there. Okay, market rolls back over. This is a perfectly qualified buy signal right there. We've got the DSR resistance right here, 60.30 to 36. And you can see we've rallied into this. Look left, we have structure relevance. So great example right there of the game of Pong, just trading sideways. Buy signal right here for the winner. Grab the ruler from long entries. At this point, we had a DSR level hanging out right there. That's 150 pips. And then if I'm trailing based on my fib dots, we'd be stopped out right there on the balance. And the second half of that trade would have pulled in around 120. Okay, so around 270. Then on the sell signal over here, short entry. Again, at that time, this DSR level was resting down here. So if I'm moving to the other DSR level, right there, 150. And then once target 1 is hit, trail stops 150. So basically 300 pips. On this one, we just had a nice little pop right here. Turning point followed by the black tip. There's the buy signal, 58.80s, straight north, 110 pips. And again, we're back into this relevant market structure. So British pound, nice qualified sell signals right here in the futures contract. You see my turning point is at 160. My big Mo is downward sloping, bearish. We've recently come off of a new structure low in recent price action right here. So this would be a lower high opportunity to get short, look for a retest of these lows, and then possibly new structure lows. All right, let's go take a look at crude oil. We had a nice little pop on crude, drove right down into our level yesterday. On crude oil, on the recap, I talked about our bid zone down here. So let's pull this in. And I also talked a little bit about the power of the automation. So let's scroll left. In our pre-market analysis, we identified that the BZ2 was close to the Globex lows. So we dropped in that blue horizontal line that represented the previous, or the Globex lows from 7 a.m. All right, so as we pressed bid zone, we had our BZ2 buy here, scalper hit, buy him again here, scalper hit, and then we made a new structure high here, taking out the previous swings. So opportunity to trail stops, balance taken out there on a trail stop for maybe another $100. Then we drove right down here. We go, our level was 76.25. We go oversold, lower high, bullish divergence, 10 cents lower, and then have a beautiful rally right off of those Globex lows. So again, KPP, key price point, versus the levels. And here we talked about having an adverse excursion type setup and this 76.26 being a good risk-reward trade for a intraday swing trade and then possibly longer term. So at the 76.26, let's go ahead and walk over here to current. Again, let's drop in our swing lows. Right there's our Globex low, 76.50. You see this is from the pre-market Europe, London. We've rallied to 78s basically, so 150 ticks here. And right now we're trading at the midpoint. Okay, so that said, Let's take a look at what happened yesterday. We had our DSR level resting below. We rolled down. There was our 76.26 right there. That long entry at around 10:45, 11 a.m. Central. And again, we popped right back into this level right there. So from the 76, let's just call it 76.30 for easy math. A retest of the DSR, 77.50, $1,200 per contract, swing trade. Targets would have been attained last night in the Globex at 8, and you can see here we popped slightly higher into our 382 fib retracement that we looked at yesterday. So for today's session, low risk short entries, good risk reward against the 77.90, 78.10. So it's about a 20-cent range here. You see that the underlying has been bearish. We have a downward sloping moving average. We just came off of these nice new structure lows, a retest to the 382 fib for a move back down to 76s and then potentially lower. Now, if this 382 retracement at 78 holds, then where are we likely to head? So here's my AB. Let's drop it in here and say if this is going to retain the swing high right there, 77, again, let's just say 78, then where would my one-to-one symmetrical move terminate? So here is AB, CD, and that termination comes in $72.90, $73 crude oil. Okay, so good extended target on any shorts. That's $5, $5,000 a contract in crude. Again, it's midweek. We have plenty of time for this to potentially play out. So swing traders, a retest of the current lows, that pays $2 or $2,000. And obviously that pays for the opportunity then to basically trail the stops, leave some room, and then see if we do get a rollover and a sell-off. When we have broken our DSR support levels, we've had beautiful directional momentum in those moves. So crude oil key price point $78, and then obviously intraday any retest of the 76.15 to 25 handle, low risk buy signals there intraday. Good risk reward. Mini Russell. Russell back to previous swing highs. Yesterday we talked a little bit about the ratio trade. Okay, so we looked at two things. A, we had an 1160 buy. You see that we popped off of that 1160, we went 2 points lower, and now we're gunning for that 1175, which is a retest of our previous highs. We did not get back down into this ratio trade, so this guy is canceled. And we came in just a little shy. Remember, we did our one-to-one analysis. Here is our AB, B to C, C to D. That projected to 57s. We actually declined to about 58. So again, if you bought that 1160 with stops below the swing over here, obviously you're in the money right there. Now, what happens if we take out these highs and we press to new structure highs? The last leg of the move up, that swing low preceded the drive to this new structure high, and so far that impulse move right there has contained all price action. So everything else has occurred inside of that initial impulse. Break above, close above, 1184 target 1, 1194 target 2. And remember, gang, it's not uncommon for this guy to pop, fade, come back down. Obviously, any pullback into the 74-75 region, nice, good RR opportunities, then a retest of 84 and then 94 here. Okay? Obviously, we're gapping higher across the board, so this is going to produce some gap fill opportunities. Again, this is counter to the underlying trend. There is the Nasdaq. We pulled right down here. We looked at two different levels. We looked at the 4130s right here. That swing trade right there stopped as we made new lows. We pressed down into our 127, got our turning point black tip buy signal, and again, here we are back at the highs, 4173. Now we have two different legs. The most recent static leg, this guy right here, is still building. So I'm going to go look left. There's the swing low that preceded this drive. And then from this swing low, look left. There's the swing high that preceded that move. So 4190 Nasdaq targets, and then 4207. 41.90, 42.07. So let's take this guy, we'll pop it here. This guy will pop it here. S&P 500. S&P testing those 2-day-ago highs, the 2018 to 2020 handle. Again, we're gapping higher. It's 7 minutes prior to the open. We're right into that DSR level. Prior session, right up here on the top right, you'll see our previous close down here at 2006. So the 1,000 tick chart, we've got an overbought bearish divergence, now a triple top. We've got that classic little ascending wedge pattern. If we break above, close above, it's probably going to be a gap and go kind of day. Here's the swing low that preceded the rally to that new structure high. So that projects to 2022 half, 2026. Okay, if we hold the triple top right here and then roll over, targets 1, obviously again, you're going to take 2 to 3 points on your scalper, let the balance run. So I'd say right here a good target on the gap fill would be around the 09s, considering the swing low right here, which is the Globex session lows, prior to this rally to retest those highs. Okay, so go trade gap open, S&P, Nasdaq, Mini Russell, and Crude. All of these guys banging against recent swing highs. All right. Let's pop this guy up. By the way, I think 17 of the last 17 midterm elections, market has launched and gone higher from over the next 2-year period, I believe is what they said. So some pretty good statistical analysis. And that's exactly what we had last night. Incumbents taken out and the Republicans take. So that's a consideration. And 17 out of 17 times previously doesn't mean we won't have a retracement. So we'll be taking a look at spiders, diamonds, IWM, and so on our equity charts as we move forward. Part of the Donchian theory and what the turtles did was buy new highs. So remember, here on the diamond, this is the daily chart. And on the DIA, I've got the Donchian set to 52. So this is the Donchian channel 52-day highs. So as you can see here, our prior 52-day high, 73.36. Recently, just a test, can't keep it going. Another test, can't get the follow through. Another test right here yesterday, and right now pre-market we're trading up about 0.5%, 174.43s. So again, we're going to gap higher. Is it going to be a gap and go? We're going to pull back down, potentially fade, or I'm sorry, fill this gap, and then do one of these. But yeah, all signs pointing higher for sure. Now, real quickly here, let's come in. We've had no retracement to speak of. So this leg again right here, gang, is still an active leg. So from this swing low, this market obviously could just continue to rally right here. So I want to look at a static leg in the market. Look left. There's my 52-day low. Look left. There's my 52-day high. So the Donchian can help identify where to place your fibs. And there we have the 127, 1414, and 1618. So if we gap and go, we'll probably go straight to the 177 handle. Right now, our average true range is around $2 a day. So a 174.50 open plus 120% ATR just about gets us here. So we could see that today if we get strong. Again, if we pull back right here, opportunity to get long. So we'll be looking for pullbacks, possibly even on 5-minute charts intraday. IWM here is at a pretty significant level. IWM back into structure resistance. Let's tighten this up. So again, unlike the other thing that we looked at, let's get rid of this, get rid of this. We rallied right back into that structure resistance. It's gapping higher today on the open as well, 116.68 in the pre-market, which means, again, it's going to put us up against these highs. So the previous swing right there, 1734, we got a little bit of a pullback. We're going to gap open right back into these highs. And then right there's the 52-day high, 117.78, 118. So we'll see if we get any qualified signals right here. Again, it could be a good R to R, even a 2 to 3 day pullback right here. If we do get a fade, we could get something on an IWM put as an example. But you see this guy still has room to run, to go grab highs. 120s, so we're still a full, $3.50 away from those areas. Okay, let's take a quick look here. Now remember, this candle right here is the 8:30 bar. That's going to close at 9 a.m., so we still got a lot of time. This guy obviously could still reverse and roll the other way. All right, gang, let's take a look here at the potential for fading the fill. So again, here's the S&P 500. Today's situation is our open was greater than the prior day's high. So we opened just outside of the prior session's range. Number two, the value of the gap is less than 1% of the value of the contract. Number three, 90% of that's 12.5 points. Okay, so the gap fills, the prior close is 2006 right here. That happens to correspond with a 618 retracement of the last leg up right here. We did make a new structure high, and we got a higher close on our 8 o'clock candle that closed at 8:30. So this is higher high, higher close. We did our Fibonacci retracement analysis on that leg up. We've noted that our Globex lows right here were the 0850s. And we do have a point of confluence on this most recent fib. That's going to be right at the 50% Fibonacci retracement. Okay, so we've got two levels. Number two, this is the 200 period SMA. This guy is the 233 EMA. You can see not a dramatic difference. Obviously, the EMA is going to change and modify slightly faster, but because it's 233, you see they remain relatively close. Right there was yesterday's buy on the swing trade that Rod called out. Okay, and that was a 1-to-1 measured move. Here, down to here, back up to here, and then where would AB equal CD? So if we pull back down into A, sell it on the gap fill, B, half profits or half position is off, again 2-3 points of profit, C, come down here, look for this to potentially fill the gap, and then fade that fill, look for the buy signal here, a retest of the highs, and then again off to new structure highs. We did the analysis on the 15, let's go ahead and do it on the 30. There's the swing low that preceded the drive to this new structure high. Pull it back down, our 127 extension, 2027, and then our 1618, 2036. Now, so far, our lows of the session are at 2,850. Our highs of the session, 2050. So we've got plenty of room to run based on our rules of projection. So take your average true range times 20%, add that number to the lows, that projects your highs. What if we've just seen the highs of the day? Take 120% ATR7, subtract it from the current highs, 2050 minus, where does that project? So two great opportunities there for profit targets. Let's go take a quick look here. NASI. Same exact visual right there on the Nasdaq. Again, like the S&P, we got the higher high, got the higher close, outside bearish engulfing. Nasdaq traders from the short entry, opportunity to cover down here. There's your Nasdaq as we approach that gap. So the Nasdaq right about here is about 85% of the value of that gap open. So Nasdaq traders, opportunity to cover the balance down here on your go trade. Color rotation sell around 41.71. Plus 5 or 6 on the first half, and then right here opportunity to take 20 points in the Nasdaq on the second half. 41.44 is our gap fill. You'll note right here again we got that little pop yesterday. I want to drop this in just for the visual. So we had structure support. We talked about this 38 handle all the way down to the 32s. We got 4 hours of held trades below, popped right back above, and then settled right back down into that 41.40 to 38 before making these new highs. So now you see we've got moving averages coming in at this price point. Again, it'll be a 618 Fibonacci retracement at this level. There's the swing low that preceded the drive, new structure high. So right back into this 618 retracement. If we get buy signals right here, obviously retest to the high pays about 35 points. So again, I can risk 10 or 12 points intraday with a reasonable target based on technical analysis to make 35. So risk 12 to make 35, 1 to 3 basically risk reward ratio. We talked about strategy automation. So this is a great example of how to employ the level 2. So I had the level 2. Remember yesterday I got one of my range trader signals, and it was the loss in the S&P. So I threw the range trader on the Nasdaq to show you right here. There's the Nasdaq right there, buying the bid zone 2. So this is level 2 automation. The strategy has the rules of engagement written in. It's got stops, it's got targets. Those are all parameters that we can modify. The intent is not to have it just set it and forget it. The intent is to turn it on, let it put me in the trade at the key levels. So here you see it got long. I've built in an adverse excursion that Marius wrote into this. There was the adverse excursion ad. The scalper hit the +5 target, and then the trader came off right here. I think I have it set to plus 11 or 12 points. So there's the strategy putting me in the trade. Now again, once I'm put into the position, it sets a protective stop that's OCO'd to a profit target. So I have the scalper has its own stop and its own target. Both of those can be modified by us as traders. But anyway, the benefit there obviously is that I would not have missed that BZ2 buy there or in crude oil. And then obviously we got that beautiful pop. So it is running in real time right now. Our range highs and lows are still in. Today's a great example of a wide range session where so far 41.75 range high, 41, let's just call it 50. So we're at 25, 27 points, which is greater than 40% of the ATR in the Nasdaq. So Rod's observations here were that if the range high to range low exceed 40% ATR, then our bid zone 1 and offer zone 1 become more relevant. Okay, so there's a great example. Now this thing, the auto trader doesn't even turn on until 9:01 a.m. Central Time. The other way to apply it, if I don't want it on this particular chart, is to come over to our desktop, our control center in NinjaTrader, and then we just apply it from the strategy section right here. Okay, Rod taught me this little trick right here, but by applying it from the strategies tab in the control center, that allows me now to have this guy turned on in real time, and then I can see all of the signals, the entries, and I can move those and modify those from the chart trader. Exactly. So you can see I've got my fib.sar running on one account, up 490. I've got my momentum running over here on crude oil, down 460, basically break even after slippage and commish. Yeah, and then the cluster trader right here, I'm running this on the Brickwick on the Dow, currently up 235. So these strategies are running in the background from the strategies tab. They are not applied to any trading charts. Yeah, so traders right now, let's take a look at this Nasdaq chart. All right, so what's occurred? We've just broken below our range lows. So our range lows right here come in at 41.45.75. We broke it by at least 10 ticks. We went down to 42.25. So we broke by 3.5 points, and we held a held trade below that. So that brings into play the midpoint. Let me go ahead, and I've got the indicator and the... Yeah, the strategy applies the indicator as well. There we go. So I'll remove the regular one, and then we'll just work off the one at the strategy. So this brings into play now the midpoint. So we'll look for qualified sell signals at the midpoint. Yeah, so see that beautiful pop. Again, those of you long on the SOS 4 or 5 from the gap fill, great trade opportunity to trail your stops aggressively. You've already hit your 5 or 6 point target. Should have 8 points locked in, so 13 to 15 point winner. Look left. Swing high right there from around 850 this morning being tested. We're overbought. Opportunity to get more aggressive on your trail. And then again, this brings into play our midpoint signal, midpoint sell, for a move down to the bid zone 1.